previous week, we have seen some signs of growth due to de-escalation and ceasefire, with the Strait of Hormuz being opened. Here, I'll be sharing some markets insight, looking at what happened past week and the expectations for the upcoming week for Euro, Gold, Oil and Nasdaq. My name is Avinash Bojwani and I'm here for Market Bits channel. This is just an opinion and not a financial advice. So the US stocks posted strong gains for the third consecutive week, with several major indices like S&P 500, Nasdaq was on its record highs due to de-escalation conflict in the Middle East and this ongoing ceasefire agreement between US and Iran, with strong corporate earnings results and the series of positive economic data releases. So large cap growth stocks outperformed with the enthusiasm around the AI related stocks. Geopolitical development remained a key focus with the ongoing US-Iran ceasefire. The Strait of Hormuz was opened after an Israel-Lebanon ceasefire agreement, which also pushed the crude oil prices further. On the euro, the European Central Bank signals it is in no rush to hike the interest rates. So ECB will be watchful for around the geopolitical tensions. And on that note, let's go to the euro technical analysis. Hello everyone. So this is the Euro USD daily chart. Okay, let's quickly go on these levels. So in my previous video, I had already discussed that 1.1830 is a crucial level which could not be breached because of certain criterias, where you can see on daily level this level has been consolidation. This level has been difficult for euro to break and hold above it. So we had seen in July, we had seen in September last year, we had seen in December, and then when it had broken in January, 1.1850 held it above that. It went 200 pips, more than 200 points to the high, around 1.2090. Then it was trying to create lower highs, which could not be again tested those levels. And finally, the breakout happened here, breaking the trend line and breaking the moving average, holding above it. So this was the first test. Second test was holding 1.1650. If you want to see 1.1650, so 1.1650, this level is key level. In 4 hours, it's a very key level which has been, once it was broken, so this became the resistance, and then there was a change of character breaking this resistance, and then we go back again to the daily chart to know that, yeah, okay, now once it is crossed 1.1650, then we know that the next target was 1.1830, which could not be breached. Now, there are certain criterias. Technical side we have already discussed, plus the Strait of Hormuz being open and the ECB not looking to raise interest rates nearby. So we will try to see a consolidation around 1.1650 level. Moving towards crude oil, which has been also a big mover, especially yesterday. We will see that crude oil fell from the 90s to less than 80, which was like around 10% crude oil fell just alone yesterday. Now, as per the daily, we are clearly seeing that this has created a double top and completed the entire range which I had discussed earlier. In my previous weekly analysis, I had mentioned that it will try to create the pattern, will complete the pattern which it had gone up and gone down. So this is actually sometimes good and sometimes not good, because there is high volatility, and if you have a good position sizing and knowing these levels, then it can be an opportunity for you. But if you are expecting that market can just head above and other levels, so it's very difficult to gauge in that. Yes, there is volatility, but if you have position sizing and knowing that these levels, you can trade and get an opportunity out of it. So going in the 4 hour, we will look in basically, so this trend line, it was not able to break, creating double top, testing the lower, which has been already discussed earlier, but still I have shown here again. Now I see that there can be a bounce as per the technicals. Fundamental, we know that yes, it has fallen, Strait of Hormuz opened, markets crashed, crude oil fell down, and we have seen a retraced above 80. So it is still holding above 80 levels. We will see, it's too much geopolitical news going around. but holding above 92 levels, which is the moving average and the trend line. This is a very crucial point. We see previous support was the same level. We see that this area has been, trying to break this area. So this is a very crucial level. We will keep it this area. So it's all about how we, manage that area if it's holding above 91. So moving on to gold. So gold looks a bit of confused, where there is a bullish channel towards it, because breaking this trend line, then holding above the moving average. So this is a 200 MA moving average. This is a 4-hour chart of gold, and 4860 remains the key resistance. So still 4860 has not been broken on the 4-hour chart. It still remains here. So I believe that there can be some test again, falling towards 4780, testing this lows, and then we will see based on the geopolitical. But at the moment, yes, it is staying above the moving average. It is staying above this. So there can be some bounce. So if it is holding this level, yes, you can go for some buying, and if it is closing below this, yes, you can go for short-term selling. Moving towards Nasdaq. So Nasdaq, there is nothing to be discussed, because you can see that there has been a tremendous move, and if someone was smart, based on the movement, and this I have already discussed that this level was very key, this level which could not be breached. So we are going towards August last year. It could not be breached, and then it closed about 26,000 levels. So as we discussed that again, geopolitical tensions, corporate earnings, strong corporate earnings, AI boom, semiconductor boom, the Magnificent Seven stocks being strong, and technically we had seen that it has broken 24,820, then 26,100, which is another resistance. We are seeing that yes, stocks will continue to rise, and we are trying to find a new price discovery. So it's actually up, but we do not know until we see some consolidation.